So, good evening, Strategic Alpha community members. Today is 18th October and today is Dhanteras. A happy Dhanteras to everyone. And we are up for yet another super interesting weekly community connect. And the topic of discussion for today is Geo to bring Bitcoin ETF in India. That is the topic for today. So, there is a question mark actually here. Geo to bring Bitcoin ETF in India? So we need to ask that question ourselves. On the basis of my connecting the dots, I'll be sharing few things. And that is the topic for today's discussion. So, good evening, Strategic Alpha community members, Conviction Club members. I thank you all for joining in for the session. Let us start with today's topic, Geo Bitcoin ETF. Are we going to see that happening very soon? So I posted about it on just few days back, 15th October. I posted that tweet on my Twitter handle. Do go through that. And so you all might be knowing that Geo is at least 10 years ahead in the planning. And why I posted about this tweet is because 2016 and 17 is the time when I first read about Geo investing into blockchain technology to learn blockchain technology. And that is when I started thinking, because if they are investing in learning into blockchain technology, they are already ahead of the curve. And that is what was the premise which I started connecting the dots later on. Because Reliance is such an organization, you must have known that Reliance Industries, Reliance Geo Infocom, which was launched with 4G and 5G, the planning for that was happening 10 years before. The cables for the 5G network, they had started laying down 10 years before the actual launch. And once the non-competence agreement was completed between Anil Ambani and the Mukesh Ambani, they launched the services. So Geo is already ahead of the curve, and whenever Geo takes any step, they disrupt the market. So this is the tweet which I made. How Geo Financial Bitcoin's India's could make Bitcoin India's next big asset class. So the premise, next financial revolution won't come from banks. So India's mutual fund AUM stands at 33 lakh crore in equity and another 45,000 crore in gold ETFs. But that is the old world. But the new world, tokenized assets, programmable money, and institutional Bitcoin adoption, is still untapped here. RBI's digital pilot is the digital rupee pilot is still crawling. So there had been some announcement related to uh, digital rupee, RBI's digital rupee on the basis of blockchain technology and all, but that project is still crawling. What it means, and after that, SEBI hasn't approved any crypto ETFs yet. And most AMCs, asset management companies, dismiss Bitcoin as considering it as a speculative. So only there is the setup which might come ahead in future is Geo plus BlackRock, because Geo Financial Services is not just Geo, it is a JV of Geo BlackRock. And BlackRock, as you might be aware, that it already has a Bitcoin ETF in US. So with this JV, in 2023, Geo Financial and BlackRock announced 50-50 JV for asset management business in India. Most saw it as a mutual fund venture, but BlackRock is one of the largest issuers of US Bitcoin ETF, which is also called as IBIT. The script code is IBIT, which has already pulled billions of dollars of AUM globally. So imagine this playbook. Geo brings distribution and political comfort. As you might be aware, that Reliance Geo, Reliance and Geo family means Ambani family has that political comfort with them. So Geo brings distribution and political comfort. BlackRock brings ETF architecture, custody partners, just similar to like Coinbase custody, etc., and global credibility. Because the credibility for BlackRock is such high that it is one of the largest asset managers in the world. So people have that trust globally, and that kind of credibility is there with BlackRock. So India might open door for regulated digital asset exposure under a new framework. Maybe it might be through Gift City Sandbox and maybe domestic listing later. And quietly, Geo BlackRock might file for India's first Bitcoin ETF, possibly under a digital asset fund category. So, economies, why this could be India's most profitable AMC product. And see, I'm just sharing my thoughts here. There is no such data available on internet. I'm just sharing my thoughts on the basis of connecting the dots. What can be the possibilities? So Bitcoin ETF globally charge around 1.5 to 2.5% annual management fees. In India, ETF fees are razor thin. It is as low as 0.05% to 0.5%. But Bitcoin would be commoditized initially because all other AMCs think that Bitcoin is speculative. And if Geo can bring that ETF very early, there will be at least because for any product to be planned, it will require 5 years of planning ahead. So I think whenever if Geo Bitcoin ETF comes, they will be 5 to 6 years ahead than the competition. So there will be super normal profitability for Geo if they launch Bitcoin ETF before others. And even if let us say Bitcoin ETF I say that Bitcoin ETF can be non-commoditized initially because ETF is a commoditized business. You cannot make high margins on it. But if you have that first mover advantage, you can make super normal margins on that. So no competitors, high curiosity, and a premium asset class. So if Bitcoin ETF AUM reaches even 30 lakh crore over 10 years, 10% of total means today's equity AUM is around 30 lakh crore. And over the next 10 years, I'm saying that if they are able to garner like 30 lakh crore over the 10 to 15 years, which is realistic because if India adopts Bitcoin as a digital gold, it is highly possible. Now, what is happening is people are buying physical gold, but number of demat accounts which were just 4 crore prior to 2020 has gone up to 12 crore, and most of the people who have come in past 5 years, they might start seriously investing into markets which can help the AUM to go up across equity and across all. But if the perception about Bitcoin, which is right now speculative, if most people think that it is the global reserve asset class, which US is also trying to do, so at some point of time, it is not hard to imagine that Bitcoin ETF can reach 30 lakh crores. And it is not impossible, it is realistic. And at 2% fee, Jio can earn 60,000 crore annually in AMC income. For a perspective, the entire mutual fund industry profits today are at around 30 to 35,000 crore. So just think, and it's not difficult for Geo to plan in advance, and they might have already started it, because go through the articles which are available from Ambani saying that they have already started investing into blockchain technologies. So, which means that we cannot deny this fact that Geo can bring Bitcoin ETF in India. Now let us move forward. So since ETF is low infra and high automation product, margins can even exceed 70%. So just think, margins can even exceed 70% for the revenues they might be making. So this is not just a fund. It can be a AUM monopoly in parallel financial system. So how can be the playbook? How they might pull it off? So regulatory gateway. So Gift City AMC structure under IFSC authority can already issue crypto linked products to accredited investors. Liquidity catalyst. What can be the liquidity catalyst? Geo could enable seamless purchase through Geo Money, Geo Pay, or Geo Financial app with UPI auto invest options. What can be the narrative control? So, how they can create a narrative around Bitcoin? So, you must be aware that Reliance already owns media arms like Network 18, Money Control, CNBC Awaz. All these are owned by Reliance. So, it is not difficult for them to create a perception for Bitcoin as a new digital gold. So, that narrative control can be done. So, custody and compliance, BlackRock brings global ETF expertise. Geo provides local compliance, KYC, and political trust. Retail domination, Geo already reaches have reached. Means at that point of time they will be having this 450 million users. That is 3x of India's demat accounts. So imagine people can buy Bitcoin ETF in one click inside My Geo app. Already My Geo app is installed by many of the Geo users. Just think of it. What can be the bigger game? Owning India's crypto rail. It is not just about an ETF. It is about creating financial infrastructure for tokenized assets. Geo's own custody and payment system, India's equal Coinbase equivalent, that can also come in future. Integration with ONDC, UPI, RuPay for micro Bitcoin investments, because you can also invest small sums in Bitcoin. It is not that you need to own fraction. You need to own the whole Bitcoin. There can be fraction, and up to 8 decimal points you can buy Bitcoin in fractions. So that is the greatest advantage of Bitcoin. So Geo blockchain nodes validated, hosted, would have hosted on their telecom cloud. Future tokenized funds, Ethereum ETFs, carbon credits, and even digital rupee backed stablecoin rails. So once Geo controls distributions, custody, and product issuance, it becomes a BlackRock plus Coinbase plus Paytm of India rolled into one. So that is the opportunity for them. The conspiracy angle, what no one is talking about, and this is just a conspiracy. Reliance doesn't move without a 10-year plan. Reliance Mukesh Ambani's playbook has always been use regulation plus capital to disrupt a market, subsidize to monopolize, extract profit once the moat is impenetrable, and as they have done it in Geo Telecom, retail Geomart, and now finance, Geo Financial. So if Bitcoin becomes India's digital reserve asset as gold once was, then the Geo BlackRock ETF could become India's financial backbone for the new asset era, with Ambani sitting on atop both the pipes, data plus payments, and the assets, digital wealth. There are a lot of ifs and buts because whatever I've written here, it is based on my connecting the dots. You'll not get such kind of a data anywhere in the news. This is not a news development. This is just what I am thinking and the probabilities which can happen. On the basis of that, I have written. There are a lot of ifs and buts, but it is worth paying attention because connecting all the dots, this is what is I am looking at. So, as a disclaimer, let me just tell you this is purely from an educational purpose, should not be considered in any way as a financial advice, even if it is related to Geo Financials, because Geo Financial is a listed stock. But I just wanted to share with you all. So, do comment in the comment box. What do you think of it? Is it possible? On as of now, it might be a conspiracy theory, but what I said just now, is it possible for Geo to do such thing in future? Please comment in the comment box as HP if you think that it is highly possible. So as of now, no one is denying the fact that it is not possible. Please comment as HP. I can see a lot of people commenting HP in the comment box. Yeah. So this was all about this week's topic. Now let us move ahead with the data and analysis and assessment which we share on a weekly basis. So before going forward, let me just share you this thing. Strategic Alpha and Suyog Dhawan are not SEBI registered investment advisors. The content provided is purely from an educational purposes and should not be constructed as financial or investment advice. Viewers are encouraged to conduct their own research and consult with a SEBI registered investment professional before taking any investment decisions. So this is weekly roundup 17th October 2025. So weekly performance, let us first look at India VIX. India VIX shot up 15%. It closed at 11.63. Nifty 50 was up 1.7%. Mid cap index was up 0.35%. Small cap index was in fact down, and Nifty public sector enterprise was also down. BSE IPO index was also down, which means Nifty has only gone up. The portfolio stocks and the sectors has not gone up in past 1 week. Have you all seen that portfolio going Nifty going up, but the portfolio is still in red? Please comment in the comment box. Has it happened to you? Yeah, most of the people are seeing that. So Nifty Reality Index was up 4%. Nifty Capital Market Index was up 3.9%. Nifty FMCG Index was up 3%. Nifty India Consumption Index was up 2.7%. Financial Services Index was up 2.6%. So energy commodities, gold was up 5.9% in past 1 week. So if gold is moving 6% move in 1 week, it is not a reason to cheer. If gold is moving that way, you should be worried. Some or the other thing around the world is going to crack. Without that, gold doesn't move up that way. So you should be worried about gold moving up 6% in 1 week because precious metal moving such high is a sign of a worry. So that is what it is. Copper was up 3.32%, silver was up 3.3%, platinum was up 0.58%, and these are the other commodities. I'll not look at other commodities. Now let us look at news which matters the most. So India to stop buying Russian oil like Trump claims, and a Ministry of External Affairs issues statement that nothing of such sort of discussion has happened with Trump because Trump is claiming that Modi had said that we'll stop buying Russian oil. But one thing is to say, one thing which we need to take cues at this point of time is if India stops buying Russian oil, think what can happen with crude oil because crude oil can quickly shoot up 15 to 20% in the absence of in the if India stops buying Russian oil, because India is buying Russian oil at a cheaper prices, the prices of crude are kept low. They are low. But whenever such thing happens, because there is a possibility and a probability that India can stop buying Russian oil in future, as we have already discussed in one of the weekly meets, that there is no incentive for India today compared to what it was 18 months back, because there was huge gap and profits for India to have that Russian oil. But today that arbitrage has gone down. So in future, India might think of it. But as of now, there is no such development. But that is a development you need to track, especially if you are trading crude oil. So silver falls more than 6% yesterday as precious metals retreat after a rally. Concerns is related to US credit quality. Bullion sales alone touched 60,000 crore, up from past last year as consumer flocked to markets despite gold crossing 1.3 lakh per 10 grams. So one more thing is what has happened is because gold has moved up now. Until recently, just 1 month back, US was still a global reserve asset. But what has happened recently is US Treasury holdings as a percentage of international reserves has came down to 23%, and gold holdings as a percentage of international reserves has gone up to 24%. What it means is US dollar, the de-dollarization which is happening. So US dollar de-dollarization is real, and US dollar is losing its value, and most of the people are seeing dollar, not trusting dollar and trusting more gold. So gold is the new global reserve asset already. This is what the data is saying. Let us move forward. One more thing is when most people are now chasing gold, this is the tweet which I made on 17th of October. Gold and Sensex have always moved in tandem over the past 35 years. We have seen that sometimes gold moves ahead and later on Sensex catches up. If the gold has moved too fast, then it might fall and touches near Sensex, or Sensex might move faster to touch the gold prices. They are always like Bada Bhai and Chota Bhai, big brother and small brother. So elder brother and younger brother, and they always have moved in tandem in past 35 years. Of course, by lags and leads. Sometimes gold leads, sometimes Sensex leads. So recently, gold has moved up too much too fast. Can Sensex catch up the gold price, or gold price catches up with Sensex, or both starts their journey to meet each other? If that has to happen, which is the best asset class today to own? Please comment in the comment box. What is the best asset class today to own? Gold or Sensex? Yeah, great. Sensex. So, why I said that in the past 15 months, I've been repeatedly saying that equity, especially Indian equity, equity as an asset class, Indian equity as an asset class itself is unfavorable. How many of you seen me, heard me saying that 15 months, for continuous 15 months? Please comment as 15M in the comment box if you have seen that. It's been 15 months, I've been repeatedly saying equity as an asset class in India is not is not favorable. It is unfavorable. Now the time has come to say that equity as an asset class is highly favorable. So this is what the tweet I made on 18th of October. But as of now, even though I'm saying that, I also said that don't have more than 4 months view, because your investment should be long term. Your thought process and investment should be long term, but asset allocation is not long term. So You might have your investments. Whenever something is unfavorable, you might move that to gold and all. Never be on cash. There might be some times where the times will come where the cash will be the best asset class. So which is like debt product, not cash, debt. So debt might be asset class, never be on cash. Some of the asset class, even debt is also asset class. But don't have more than 4 months view. One can revise it in December. Again, what is the further course? So as of now, for next 3 months, I don't see any worry for 3 to 4 months. I don't see any worry for equity markets, at least from Indian perspective. Why I'm saying so? In the next data, I'll be going through it, taking you through it. Because why I'm not seeing beyond 4 months, the the thing is, as the gold and silver has moved up, and as the total debt for US has moved up, and as Nvidia and all this AI bubble is happening, I cannot think of very long term as of now as a equity as a asset class. So I'm keeping my view only for next 4 months. Then again we can have a review, and if that view gets extended from 4 months to next 6 months again, that is a different part. But don't have more than 4 months of view. That is what was important, and why I said that equity as an asset class has become favorable. This is Nifty 500 in dollar terms USD to gold in USD ratio chart. So if you have seen here, whenever the ratio hit this trend line, when the ratio moved down, so this is a zone. Red zone is the zone when you need to own more of precious metals. Green zone is the zone where you need to own less precious metals and more of equity. And the ratio has now touched this trend line, which means the time has come down to shift from gold and shift it to equities. And for the next some time, the equities as an asset class can do better than gold. So this is what the asset allocation decider says. Now let us move forward. So this is also earlier I said about gold. Now let us look at gold and silver both. This is equity divided by precious metals asset allocation decider. So red zone is own more of precious metals. Green zone is more of own equities. So this was posted few days back. We are already almost reached here. So which means both the metals, precious metals, gold and silver, it is better to book out lump sum. You can still continue SIP in precious metals, but the lump sum investments is it's not the great time, and it is not safe to keep your lump sum there. So it is better to shift, as a asset allocation decider tells, that shift from precious metals to equities, and time to own more equities has already come. So this is what asset allocation decider tells. Now, say, let us say equity as an asset class has turned it has turned favorable. But what is the probability that immediately equities can do very well? So, because if do I need to go staggered way in equity, or do I need to, what is the strategy which I need to do? So let us look at first the case for lump sum investments. So this is Nifty 50 chart, and Nifty 50 has given a cup and handle breakout. And cup and handle breakout on Nifty 50, and I said that about 25,660, if we get a weekly close, FIIs which have heavy shorts on India, FII net shorts are still high as above 85%. About 25,660, FIIs have to run for cover. This is what I posted in satellite channel, even in Conviction Club. So, but what has happened is weekly close has happened about 25,660 already. It has closed at 25,709, which qualifies this as a clean cup and handle breakout. So earlier, my view was around 90 to 100 days looking at PSU banks and other sectors, capital market, and even Nifty Metal, which I covered earlier. But now my view has got updated from 90 to 100 days to 100 to 120 days. So as the data progresses, because you cannot have you cannot be rigid, you have to look at the data and you have to respect the data. Why I'm saying 100 to 120 days is because now Nifty has given a clean breakout and the total time for this consolidation divided by 3 comes at around 100 to 120 days. So my views have got updated from 90 to 100 days to around 100 to 120 days for the markets, and I'm bullish for next 100 to 120 days. So we are headed for a melt up in large cap and large mid cap companies. Confirmation from small and mid cap hasn't come yet. Now, let us say the breakout is happening, but is there a valuation comfort? Because that is what I asked, that is what I posted in in on Twitter some time back. Even though equity as a asset allocation has turned favorable, but unless and until there is a valuation comfort, it's of no use. So let us look at valuation comfort. So this is Nifty 50's price to book chart, and Nifty 50 price to book chart, this is all time data, way all the way from 2006 to till date, and median price to book is around 3.6. 10-year median price to book is around 3.6, and today Nifty is trading at 3.4. So, do you think there is a valuation comfort here? Comment as VC, valuation comfort, if you think that valuation comfort is there. And this is Nifty 50. I'm not talking about small and mid caps. This is Nifty 50. There is a clean valuation come. Someone said no VC. It is not no VC. It is clear VC. It's a clean VC because there is a valuation comfort. So the valuation comfort lies in large companies. So valuation of Nifty 50, Nifty is comfortable and below 10-year median price to book basis. This can re-rate the markets because of valuation comfort. So what can happen is, because FIIs might run for cover and they might also turn buyers, because FIIs don't invest much into small and mid caps. They invest more into large caps. So this valuation comfort, just few years back, the Nifty price to book also touched around 5 times. So there is a huge valuation comfort in Nifty. In past 1 year, I posted about it in September itself. We might go through time correction and valuation correction, and that time correction and valuation correction has happened in Nifty 50. So people are now chasing precious metals. However, the opportunity is somewhere else. That too with enough margin of safety. There is no margin of safety in gold and silver today, but there is enough margin of safety in Nifty 50. Now, I also posted about it that why 3 to 4 months is can become a melt up. I'm using the word melt up. Melt up means a super crazy run on the upside where people will try shorting Nifty, but market will go up on a daily basis. Have you seen it in past that you might have thought that by market नीचे आने के बाद ले लेता हूँ, but market keep on going up? Have you witnessed that in past? Similar sign, similar type of situation is about to arise from maybe next week onwards. Maybe 1 or 2 weeks it might also get 1 week by delay, but there is a high possibility that market might go into a situation where you might wait for the correction, but the correction might not happen, and clearly markets can make newer highs going forward. And why I'm saying so is because of this data. So this is Nifty 500 Dolex 100, S&P 500 Dolex 100. S&P, this is not S&P 500 Dolex 100. This is Sensex 100 in dollar terms. So Sensex 100 in dollar terms had just went up above 30-week moving average, and once this Sensex in dollar terms crosses this line, it will be a cup and handle breakout also. So as of now, what will happen is maybe short covering might happen from FIIs about 25,660 as level mentioned, but the fresh buying can only happen from FIIs whenever this breakout happens. And why I'm using the dollar denominated Nifty chart, Sensex chart, is because you might have seen that you invest more money only when you see positive returns in your portfolio. And maybe you might also invest in during the downturn, but most of the investors invest more money when they see positive outcome. And it is a psychological thing. So US investors which have invested in India, they have not seen any positive return in past 1 year. Whenever they see that their positive return has started coming up, they might increase their allocations. So if the no shock hits in the next 3 to 5 months, the tsunami of foreign funds could flood India. And as of now, I'm just posting it. The tsunami of foreign funds cannot happen next week onwards. Before that, the short covering can happen. But this is a key data to watch. Sensex in dollar terms after the short covering happens. So if once Nifty USD terms crosses its lifetime high, which is just 7 to 8% away, and for Sensex in dollar terms crosses 7% high or lifetime high, it doesn't need Nifty also to move 7-8%. The Nifty can move 4% and the rest of the gains can also come from USD INR. So if USD INR comes down, means towards from 88 to let us say 86 or 85, it can also help this breakout happen very soon. And so there is two way. So why FIIs might be interested in India today is because India have best macros ever. Valuations have now cooled off in large caps. Reforms are on track. If you see the reforms which Indian government has made in past 8 months, they are huge. Do you all agree to it? Comment has agreed in the comment box if you think that the reforms which they have made, the GST reforms, GST 2.0, the taxation reforms, and all those things. So reforms are back on track. Global capital hunting stability. So India has one of the best stable thing, because if even if let us say there are possibility, I have said earlier that there are a possibility of bigger crisis than global financial crisis in US, but India will not be that affected this time compared to 2008, because in 2008 crude was high. Crude was high around above 100 USD. Today, crude is low. Our import bills are low. Our fiscal deficit is in best position. Our foreign surplus are in best position. All our macros are excellent. In 2008, our macros were bad. So crude oil was also in a commodity bull run during that time, which hurted us big time because crude touched 140 USD. So even if a bigger financial crisis than GFC happens this time, India will be in a best position. So Indian markets will be buy on dips. Let us say after 3 to 4 months, we if such situation happens like global war happens or any US global means financial crisis happens, so that can bring Indian markets down by 15 to 20%. But it cannot make Indian market suffer like 2008, because Indian markets are in a best position. And in fact, what might happen is, because US there is a possibility of a lost decade ahead in US, uh, because US is 25% of global GDP and 76% of global market cap, which is unsustainable. At some point of time, valuations do matter. So if money has to flow out from US, where it will go? It will go in emerging markets. China might receive the highest flows and followed by India, because anyway, if they allocate to emerging markets, India will be a beneficiary. And as of now, if you have seen the data from FII, there have been constant sellers in past many years. Their FII holding in Indian as a total percentage of holding is at a 17-year low, which means they have not sold they have not sold because they are negative on India. It was their tactical bet, and most of the decisions which they take are tactical in nature, nothing related to country's fundamentals. And imagine one thing: if FIIs have clearly sold like anything, left, right, and center, Indian retail investors, DIIs have bought like anything, but think of it in past when FII would have sold such big quantities in India, Indian markets would have gone 15-20% lower or 25% lower. But this time around, we have not seen any kind of such fall. Even in past 1 year, even though I took a session and saying that last phase of bull run in September 2024, and which played out extremely well, because the video which we took, we clearly said that it is the best time to own precious metals, and precious metals outperformed equities. Now the time is to move back from precious metals to equities, because Indian markets can do extremely well. And even though even in past 1 year bad things were happening, but Indian markets, yeah, small and mid caps fell down more, but Indian markets didn't fell down. It went through a time correction, even though FIIs were selling left, right, and center. So think about it: when FIIs, DIIs, Indian family offices, and retail buy together, what can happen? So market don't rise, market re-rate. So tsunami of foreign funds can hit India whenever the dollar Sensex in dollar terms hits new lifetime high, and it is just 8% away. So there is a possibility. So this is a key thing to track. If this breakout happens, then your Diwali can extend into Christmas, and your Diwali can extend into Christmas and New Year also. So this is a key thing to watch. So one more thing is, past few days you might have seen this happening, that Nifty is up, portfolio is down. ये क्या दुविधा है? Is investors' favorite paradox? What here is what exactly happening. So index is not market. I have already said about it that index is not a market, because index is not a true representative of market. Index is a handful of heavyweights: HDFC Bank, Reliance, ICICI, TCS. So if they move, index moves. Even if 70% of the stocks are in red, if these stocks are in green, the index moves upwards. And that is what has exactly happened. Narrow leadership. We are in a polarized market phase. Repeat it once again. So Nifty up, portfolio down. ये क्या दुविधा है? And we have seen that sector rotation is happening in PSU banks, metal, data center, and capital markets. So stock specific pain is there. Bottom line, index may move up, but the breadth is weak. So your portfolio pain is the market rotation. So please be patient. Don't think of it much, because first chronology समझिए. पहले first strong sectors and stocks move, then Nifty moves, and then broader market moves. So first strong stocks and sectors, which is PSU banks, capital markets, and metal, had started moving. Then Nifty has started moving and it has given a breakout. then later on broader market might also start moving up. So that is the chronology of any market cycle. So broader markets shall start outperforming when Nifty 500 equal weight index crosses 14,797 on a weekly closing basis. That is when the broader markets can start doing well. One more thing is I told about Nifty earlier, but small caps are still at alpha losing cycle. So I posted about it on Twitter that Indian small caps are still at alpha losing cycle. So even if you want to own, it is better you own large small caps or small mid caps or large caps or small mid caps or large small caps, because the lower the market cap, less or no alpha, higher the market cap, higher the alpha. And why I'm saying so, because whenever there is a liquidity rush, the liquidity always enters into the space where there is highest safety. And is there a safety in small and mid cap today? Median valuations are frothy, beware. So the valuations for SMID even today is at 41x, 41 times, and peak it reached around 46. The valuation comfort lies in large caps, not in small and mid caps. So this is what the data is saying, and the chart is saying this is Nifty small cap 250 divided by CNX 500, which means that small cap index can underperform the large market. So this is what the data is saying, and if the small and mid cap index gives a breakout, then it's a different part. But as of now, there are no such indications, and the early indications are like larger companies can do well over the next 3 to 4 months. So on October 12th, I posted about it because you cannot have more than 4 months of view, is because US banks stocks have cracked and they have started cracking. Look at the bond yields. So yesterday's price action in US is worrisome but not alarming yet. Being US banks have also cracked, keep a close check. If India outperforms US on Monday, it will be a sign that India outperformance will continue for some time. This is what I posted on 12th of October. Full confirmation can come only by end of the month or maybe end of the week about India's outperformance against US. So during 2008 times also what happened was India was decoupled for some time, and later it also got crashed along with world markets. So we'll keep you updated on this. That is what I posted. So, and I later on posted on 18th of October that this is the chart which I posted on Twitter. Can Indian markets outperform US markets from here? So this is a Indian markets in dollar terms divided by US markets in dollar terms. So this ratio, whenever I has touched this line, and it has from this point, India has started outperforming the US markets. If you have seen here, if the ratio is moving up, which means India has outperformed US. So here also this is a zone where in past India started its outperformance. So can we see that outperformance going ahead? There is high possibility and a probability. Market is a probabilistic world. You cannot say with 100% confidence. But as of now, the probability of Indian markets doing well better than S&P 500 are much high. So this is what I posted. When most are focused on investing in US market, can home country now provide better returns than US going ahead? Watching this closely for a decisive confirmation. Majority of our holdings in US gold miners, silver miners, we had booked full profits as mentioned in the morning. Just holding Copex in US from copper miners stock perspective. So we are light on US already because gold miners, silver miners, majority positions had booked. And even if because copper miners can do better than US markets, we have already seen that. So it's not that this is about outperformance. It doesn't mean that US market not do well. It might happen that US market might do well, but India might do better than US market. So I also posted about it. If you are a student of market, do go through this tweet. Lessons on investing by Howard Marks, and we have created we have written a blog in which we have collected all those memos and our learning from those memos. So do go through that. I posted this tweet on 17th of October. If you're really serious about investing, do go through this. So I also posted about this that very initial signs, but I'm thinking to shift my gold miners money into Bitcoin. Not fully, at least partially, because I am bullish on Bitcoin. Not heavily bullish on Bitcoin. I have started becoming bullish on Bitcoin. So before, but I am observing few things, and before I take the final decision, this is the observation which I am doing. So Bitcoin is the new digital gold of new world. Whoever will learn it will earn it. So in fact, we took a special super session on Bitcoin last week with Mr. Amit Damija, and we got huge response. We have received total 48 registrations for it was a paid program, and so whoever will learn it will earn it, and that Bitcoin is a absolute proof of global reset happening. So Bitcoin might form the bottom today. Nothing conclusive as of now. Closely tracking. That is what I'm still tracking it. Nothing conclusive, but that is what I posted about it. So don't follow me blindly here because I start the allocation small and I keep on averaging on the upside, or whenever I get the full conviction I invest more. So initial signs, that is what I said. And someone also said that you might be knowing the risk about Bitcoin. What will happen if Satoshi Nakamoto sells his complete holding? So, what is my plan? I have posted about it. So, even if I buy it, because as of now I'm just tracking it, even if I buy it, will keep my Bitcoin allocation of all financial portfolio, not more than 10%. That too, 50% with a tactical stop of 1 lakh. Today, Bitcoin is trading at 1,07,000. So, even if I buy it today, let us say, I have not yet made a decision. So, if I buy it, it will be 50% tactical stop with 1 lakh, and I rest, I don't want to sell ever. I'm ready to take 100% hit on my partial position. So whatever is left, because 50% I'll be doing tactical, and 50% I don't want to sell ever, even if that Bitcoin goes to zero. Because anyway, I'm doing it is not about the risk, it is about the risk management. So even if some things happen, like if Satoshi Nakamoto sells, nothing changes for me, as it was a calculated bet. But if you are not aware about Bitcoin and what global developments are happening around it, uh, you might miss a lot of things. So there is a special video which we did on Bitcoin. It is available on YouTube and it is absolutely for free. You can go through that and watch that. What exactly is happening in the Bitcoin world? So why I got interested as of now is because Bitcoin is just trading near to 30-week moving average, and just see what has happened in past. It has moved 10% below 30-week moving average in past, and once again it has bounced up. So it's a volatile asset class, can move 10% down below 30-week moving average for short period of time, but it is not a big worry. But as of now, it is in uptrend, and it has, in fact, after this, it has started bouncing up in past 1 or 2 days. Nothing conclusive, but this is the chart which I am sharing. Then there is one thing why I am not fully bullish on Bitcoin is because of this data and chart. This is Bitcoin versus gold ratio chart. So whenever this Bitcoin versus gold ratio charts breaks out here, as of now, Bitcoin is underperforming gold, and this is not a good formation. I will wait for the month end to get full confidence and conviction, because if it bounces back from here, that my confidence will increase on Bitcoin. As of now, yes, Bitcoin, it's good to start tracking and all, but as of now, nothing much high. It's not a high conviction. So if it breaks out here, then my conviction will increase, because it will be a sign that people, more and more people have started accepting Bitcoin than gold. But this is a tracking which I'm doing. So words of wisdom. This is if you are trading or even investing, if you have done any mistake in trading or investing, exit the position immediately whenever you realize it, irrespective of profit or loss. Because if you keep on holding to your mistake, you will suffer, and it will also give a lot of emotional pain, and your next trade will also go wrong because of it. So this is word of wisdom. Second word of wisdom is, to get what you want, you have to deserve what you want. The world is not yet a crazy place to reward a whole bunch of undeserving people. So if you want, if you to get what you want, you must deserve, you must be deserving for that. And I value Mr. Charlie Munger's quote here, and that is what I brought it to you. I posted this. Do go through my Twitter post. I do post it on a regular basis. Thank you everyone for joining in. Don't forget to follow us on our social media handles for this dose of knowledge, wisdom, and ideas. I'm available on Facebook, YouTube, Instagram, Twitter. And the true wealth is a home lit up with joy and warmth. Shubh Dhanteras to everyone. Happy Diwali to everyone. Once again, let me, before going forward, ending this session, let me tell you about the Techno Value Investing Workshop. In the first week or second week of November, we'll be doing that. So, Techno Value Investing is a blending of technicals, fundamentals, value, and trigger. Because technicals will tell you when to buy, when to increase, when to reduce, when to exit. Value will tell you how much to buy. Fundamental will tell you what to buy, what not to buy, and triggers will help you prioritize between the bets. That becomes a holistic investment thesis and process. So I'll be taking that workshop. Do register for that workshop. With this, I've come to an end of this today's weekly